For more on Unity and Workday, let's bring in Brent Thill from Jefferies. Brent, I'm going to start with Workday, unless you have some insight into what in this Unity report has the stock reacting the way it is in overtime.
Yeah, John, Unity really is being impacted by a 25% reduction in force and effectively numerous management team members leaving the company. From our perspective, the inside of this company right now is a mess. There's an incredible amount of change. They're going through a strategic review. They've gone through this RIF. And again, remember, they announced the reduction in force at the beginning of the year. But it's rare to see, the magnitude of a cut unless, something's really bad. You don't usually see tech companies cutting 25% of the workforce. So I think those changes are rippling through the organization. And then you have interim CEO Jim Whitehurst. Is he going to stay? Is he going to go? No one really knows what's going to happen. Everyone really holds Jim in high regard. He ran Red Hat, was CEO of Delta Airlines. He's a great leader in our industry, but is he going to stick around? And so he's interim CEO right now. So ultimately, is he going to make all these changes? Are we going to have a reduction in force? And then effectively, what is he going to do as a CEO? Is he going to go, or is he going to stay at the company? So Brent, I think there's too many answers, too many questions, not enough answers right now.
Yeah. Well, let's try to get some context at least. Take a step back with me. What on earth happened here? Because a few months, maybe a year plus ago, Unity was buying ironSource. AppLovin was saying, hey, Unity, why don't you buy us instead? And now AppLovin is worth, around $20 billion, while Unity's worth $12.5. I mean, the apps space and the need for digital clarity and advertising and data seems to be healthy. So how did this company stumble? Does it say anything about the overall industry that it's playing in?
They're losing share, John, is effectively what's happening to AppLovin. AppLovin's taking market share against the Grow business where ironSource is at. And remember, the entire management team in ironSource just punched out. They all left. We know this management team. It's a phenomenal group of people in Israel. They all checked out. Okay, so they're gone. So that side of the business, AppLovin's taking share. Unity is losing massive market share. And ultimately, what does it look like over time? It's unclear right now. On the Grow side, it's effectively a duopoly between Unity and Epic. But they've had their fair share of issues on that side of the business as well. So at this point, again, I think, like I said earlier, when you have a brand new CEO come in, it was poorly run before. They made a change in their CEO with John Riccitiello, bringing in Jim Whitehurst, who I followed and admired at Red Hat. Ultimately sold the business to IBM. I mean, I think you have a situation here where the company is spiraling, and they have to stop the spiral and get it stabilized out of the stall that it's in. Okay. And we effectively think, again, that's going to take time. Jim's making the right call. They're putting the right initiatives in to get it stabilized. But it's going to be a tough one for the next few quarters to get it in the right spot.
Yeah, and certainly investors selling out right now. The stock down about 10% in overtime. Want to get your thoughts on Workday, because it looks like it was a beat on the top and bottom lines. Fiscal 25 guidance, reiterating subscription revenue that's represents 17 to 18% growth year on year, non-GAAP operating margin of 24.5%. Also announcing an acquisition, yet the stock is trading lower right now. Why?
Not enough on the print, not enough on the guide. We think Carl Eschenbach is one of the best leaders in the software industry taking over. We've known Carl for 20 years. This is the right guy long term, but like any new head coach, it takes time to put your players on the field, to effectively run the plays. And what I'd say is that they're investing in international markets. They've lost share to SAP. I'm sitting in Germany, SAP's backyard right now, and effectively, they have to figure out how to get their market share back in international markets. They talked about the financial product, trying to get better traction there. And they've had some initiatives they have to put in place. So you have a new senior team in place that I think is going to make dramatic changes and dramatic impact to the organization. We're very bullish on Workday, unlike Unity, where we don't have a buy, we have a buy on Workday. And we think that ultimately Carl in the new team that's come in is really going to lead the next generation of execution and better growth. They guided to 17 to 18% subscription growth that's in line and 24.5% margin. Again, this company's capable of producing mid 30% margins over time. So they're far from cruise altitude. They got a lot of room left. They've got to put these investments in to get market share back against Oracle in the U.S., SAP internationally, and improve their execution.